Natasha DeSano, her husband and their 3 children recently moved to a bigger property in the mountains, 80 kilometres from Sydney's CBD.
To give them more of an opportunity to be on bigger land, to feel free, be themselves, as well as give us the opportunity to just live a different lifestyle.
Their new house is on a block 20 times the size of their old home, but their mortgage is about the same.
Hi, girls. It's pretty much like we've done a swap, but to me I feel like I have no loan purely because of the happiness that my family and I have here in Kurrajong.
The DeSano's move echoes a trend of people moving out of the city during the pandemic. Properties in regional Australia increased 0.5% in May, but it wasn't enough to stop national prices falling as values declined in Sydney, Melbourne and Canberra. Other capital cities posted price growth, led by Adelaide and Brisbane, but most are now slowing, and it won't stop here.
We've got higher interest rates, higher sensitivity to interest rates because of relatively high debt levels, and more stock coming onto the market over the past few weeks. So I think all of this points to an acceleration in the downturn.
As property prices decline, economists warn people will feel less wealthy and may cut back on their spending, which could lead to a shrinking economy. But in the first 3 months of the year, we were spending big. The economy grew by 0.8% in the March quarter and 3.3% for the year. Business inventories, household and government spending drove the expansion. But household savings fell as Australians spent more on travel and going out. The biggest drag on the economy was a surge in imports, while exports turned negative as commodities production took a hit from worker shortages and bad weather.
These national accounts are a glimpse of the mess that the former government left behind for us to clean up.
As COVID restrictions eased, the hospitality sector picked up and businesses like this coffee wholesaler benefited.
The demand is quite strong for coffee, tea and the social aspect. As discretionary spending tightens up, consumers will still go to the cafe to enjoy that coffee experience.
But Omicron didn't make it easy for Alexander and his team.
We probably had about 40% of our workforce during probably January and February that were impacted.
COVID restrictions are now likely a thing of the past, but with rising inflation, what's clearly in our future are interest rate hikes.
I think that is going to concern the RBA, so that certainly leaves open the option that they could opt for a 40 basis point hike.
Unwelcome news for homeowners like the DeSanos.
Daniel and I are budgeting very, very tightly on that. We're able to just put that little bit extra away as like a buffer for these hard times that I'm sure are on their way to come.
A buffer that could shrink when the Reserve Bank meets on Tuesday.